Guys, welcome back to Wolf. It's good to have you all here. Today we're joined by KraneShares. We have Henry with us, and we're going to talk about all the markets a little bit, global markets that a lot of people overlook. KraneShares is a firm that's been helping investors. They built a great reputation. A lot of stuff happening like in China, in the global and geopolitical realm, with a lot of investable ETFs. They've got some really, really cool stuff, actually. I'm going to link down below this stream a site to their site where you can kind of check out all the various ETFs they've got and all the offerings they've got. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contains this and other information about KraneShares. To obtain a fund's prospectus and summary prospectus, visit their site at KraneShares.com. A fund's prospectus and summary prospectus should be read carefully before investing. We're very excited to be working with KraneShares. Henry, welcome to the show. It's great to have you.
Thank you, Kate. It's good to be here.
Absolutely. So for people who are unaware, maybe it's hearing about you guys for the first time, why did you guys choose that particular sector to invest in? Why are you focusing on the geopolitical realm? And then tell me a little bit about your company overall.
Sure. Yes. So KraneShares, I'll do it in the reverse order, if that's okay. So KraneShares was founded in 2013 by Jonathan Crane, who built and sold a successful media and entertainment business in the 90s, early 2000s in China. And he sold that business. He's an American, came back to the United States and said, hey, China's really developing over there, and American investors and global investors don't have convenient ways to access China's capital markets beyond these very broad, what he thought were very broad indexes that covered, these old economy, what he called old economy sectors like manufacturing, energy, and financials, banks. And he said, that doesn't really reflect the China that I experienced in my time, right, when he was there in the early 2000s. So he did one of the first businesses to actually use QR code ticketing in China. So he saw this explosion of internet technology there. And he said, why aren't there index products, ETFs or mutual funds that are capturing these growth sectors, these new technologies in China, that consumer spending, right? Where are those? And so he founded KraneShares really to provide that very unique access into China. Fast forward to today, we've expanded. We have about 30 products out there in the market across US, here in New York listed, and also listed in Europe and Hong Kong. And so our main focus started out being China. We've expanded to broader emerging markets as well as emerging technology themes such as robotics and artificial intelligence. So we got a big thematic suite of ETFs, any of which I'd be happy to speak on.
Yeah, sure. I was going to ask, what has investors that you guys have, on the ground floor, the retail crowds, what have they found the most interested in? Are they looking in the AI world? Are they super interested in China? Is there a bit of friction there? How has that experience been?
Sure. So, it's gone kind of back and forth over the years, right? In the past couple of years, it's been really, really positive, and we've seen kind of an upswing since I'd say kind of early 2024 into 2025. China's performed really well, and so we've seen a lot of momentum, a lot of people looking in who weren't allocated before, because of course you go to the 2 years prior to that, and China was on this kind of bear market downtrend cycle. They had a lot of challenges they were dealing with, especially real estate, which got deleveraged, right? And there was a bit of a real estate crisis, 2022, 2023. But now in 2025, we vastly outperformed most of our products in China, outperformed US markets. So now we have a lot of investors looking in saying, hey, how can I access this? How is this going to fit in my portfolio? And then for individuals, we've really seen, a lot of interest in technology. So our KWEB, ticker KWEB, China Internet ETF, that's been really popular among investors over the past year, individual investors. Also AGIX, which is our AI and technology global ETF, has been really popular among investors, as well as we have a robotics ETF, KOID, which is US and China robotics. And so that's been a really interesting, really popular product recently. As well as we've also launched a 2X suite where we have ETFs that provide 2X exposure to what we think are the most dynamic stocks in emerging markets and in China. So this includes Baidu, we have KBDU, we have Alibaba with KBAB,
Oh, right.
and
Alibaba.
Mercado Libre, which is the Latin American e-commerce, and we have that in a 2x ETF as well, ticker KMLI.
I like it. Yeah, a lot of the Wolf Bitcoin market talk discussions. We got a couple Alibaba bulls, and so I'll be sure to
Okay.
let them know if there's a 2x leverage of Alibaba. That's very cool. Yeah, it kind of gives me a question that pops up in my head. Like, how do you guys decide at KraneShares when a theme crosses the horizon and becomes investable versus more just an interesting narrative?
Sure, that's a good question. Well, for us in the ETF world, right, the underlying investment has to be pretty liquid, right? So that leaves out a few things, right? Like you can't always put an ETF structure, but then we're talking about, so we limit it to stocks, right? We like to look at what's going on. So a big theme for us is like we look at what's going on in a place like China, in the developing world, right? And those might be trends that are starting up over there, and maybe they're going to come to the United States, or maybe people in the United States aren't really realizing these trends are out there yet, right? But they are investable, right? So we saw this with consumer tech, right? So we launched an ETF called KEMQ, which is Emerging Markets Consumer Technology. And so that basically took the story, what we saw what was happening in China, which is that all of this increased spending, all of this kind of global middle class rising, they're spending online. They're not spending in big box stores or in local markets anymore. They're going straight to those e-commerce platforms. We saw this happening in China really early on. And then we saw this happening in Latin America and Southeast Asia and all of these other more developing, so to speak, parts of the world. And we said, hey, we can expand this theme into other parts of the world. So that's what we did to create KMQ. So just to give you an example, it's sometimes it's not an exact science. And some of the trends we see might be fascinating, and they might be really, really interesting to us, and be able to make a good return, right? But we're also driven by what our clients are going to be looking for in the future, right? So there's kind of this push and pull where yes, we are free to make our own assumptions of kind of what themes we think, what are the mega trends. That's a word we think about a lot. Like, what are the mega trends going to be impacting the world in the next 10 years? But also, what are our clients' needs, right, as well, which is really important. So in the case of an example like KMQ, there wasn't really a product quite like that in the market, and we saw that there would be some demand for that. So it's a combination of factors, Cade, and it's part of what I do every day here as an investment strategist, and it's that's what it is.
I like it. What other things end up taking up most of your time over at KraneShares?
Sure. So over the past year, we've done a lot of new fund launches. So like I mentioned, we did the robotics ETF, ticker KOID, global robotics, US and China mainly. And that was, we did a lot of promotion around that. We did a lot of thinking into, okay, how is this index going to work? Whether it's equal weight or market cap weight, it goes into equal weight. So things like this around new launches, I think recently have taken up a lot of my time. Now in 2026, I'm doing, I think, a lot. We've just had so much interest. I'm doing a lot of talking to media, such as yourself, which is really fun, and it's great to get our message out there, and just kind of educating investors on these big kind of themes and trends that we're seeing that, again, come from our knowledge, are not exclusive to China or emerging markets, but our ability to identify these themes definitely comes from our experience there. Right. And so being able to share that message around our product suite, right, has been really, really fortunate for me. And yeah, that's taken up a lot of my time, kind of constructing kind of what is our outlook for global markets and how do our products fit into that. We've also launched model portfolios as well, where we try to kind of have a template, so to speak, for where our products may fit into a portfolio more broadly. As well as we've now launched private vehicles, private funds in the private equity space, very mature private equity space, also reflecting our views on these themes, translating that into private markets as well. So that's a lot, but those are the kind of the main main things have been taking up my time recently.
Very cool. Yeah, I was going to say, it sounds like you're pretty busy.
Yeah.
One thing that I learned this past year, speaking with a lot of people, and the ETF world, like really, I feel like has exploded. Maybe it's just me, but I feel like it has truly.
Oh yeah.
And a lot of like the people like myself who just didn't have this much experience in that world, we'd look at the ETF world, we'd be like, that's where you throw money in, you don't really pay attention. It's just kind of like retirement stuff. And then like the more I learned, I was like, wait, that's not at all what this is. I'm curious on where you think the ETF model is still underutilized today, as well as maybe where you think the space is headed and where you guys are trying to position as well.
Sure. Yeah, I gotta say, over the years, I've come across a lot of people with your same exact opinion, where they'd say, "Oh, they're like, oh, you do ETFs? Yeah, that's really boring, But so well, it turns out it's not. At least, certainly for what we do, it is far from boring. Of course, we're doing kind of more high octane stuff than what you'd find just like your regular S&P 500 index fund, right? Obviously that, yes, one could argue is a little bit boring, but what we do is definitely more interesting. And so where do we see the industry going? So I think look at it as kind of there are two tracks, I would say, in the industry. One track is more on the side of that tried and true S&P 500 ETF index fund. In many cases, you're replacing what was a mutual fund or other type of vehicle with an ETF because it is just more efficient. As it is in the United States, the wide majority, 2/3 at least, of 401k plans only allow for the investment in mutual funds still today. And we think at some point, those are all going to be converted to ETF assets just because we think an ETF is a more efficient structure. So that's one side of the industry and one growth area for the industry. And the other, which is more of what we're doing, right, is having ETFs that are more and more complex, that give investors more and more bespoke exposures that are many times more risky, can be even more risky than some stocks, right? And that's important to remember. But just giving investors broadly, right, a larger toolkit, right, to play with, and that's more. I would say we're kind of in both. We have feet in both pools, but we're more on the latter side, right, where we're giving you that unique exposure that you're not going to get anywhere else. In some cases, it's going to be more risky, right? And we have clients, and that's reflective of our client base, because we have clients, we have individuals, financial advisors. We do very well with smaller financial advisors all over the country. We have global institutions, as well as even hedge funds. Even hedge funds will use our products, right? Because they're not looking for just simple passive beta, right? They're looking for something more high octane where they're taking a risk, they're expressing a view, and we're just giving them the tools to do that. So that's been really exciting for us. And of course, this single stock levered category, right, is the ultimate expression of this, right? Sure. Where you're actually giving people what we like to call magnified exposure with a daily reset to key stocks, right? And that's what we've been focused on. Well, not focused on, but that's been a big part of our recent product launches have been in that space.
Definitely. So you mentioned like some like the hedge funds and people who are trying to get access to more. I don't know if risk is the right word, but a bit more of life in their portfolio kind of thing. What role do you think, and maybe this falls under the I'm not sure if this falls under like financial advice, so you can feel free to answer this any way you want, but what role should like China, the emerging markets and stuff like this play in a portfolio with someone who's already pretty exposed to like US equities and stuff? Like how should they think about balancing their portfolio?
Sure. I think it's a very important question. And I think obviously everyone's different. Everyone has different financial needs, but I think that emerging markets should be included in a well-diversified portfolio. I think that you've seen over the past 10 years, more often than not, if you look on a quarterly basis, the US has outperformed, and certainly on a cumulative basis, the US has outperformed almost every other market when you talk about countries in the world over the past 10 years, right? Which is amazing, and that's great for the American people, the American investor, our economy, no problem. But the thing is, what happens when that's no longer the case, right? And we're seeing major shifts happening right now. Right now, we see the U.S. dollar declining. It's declined so far this year, it declined last year. We think that could be a longer term trend, okay? You have real changes happening in the way global capital is moved around the world and the way global capital is allocated that are going to affect how the next decade looks, right? So if you think of the world, if you think of time in decades, right? So we look at the past decade, as I said, US outperforms in almost every case, whether you look at annual, quarterly, what have you. In the decade before that, it was flipped and emerging markets actually outperformed, right? So what was going on in that decade that wasn't going on in the past 10 years, right? Well, one of the things was US interest rates were much higher, right? And you look at that 2 decades ago, now we're talking, right? And over the past decade, they've been near zero until 3 years ago, right? And this is setting up for an environment that we think will be like the decade before the immediately previous decade. And so that's going to have a huge impact on how capital is allocated and how capital performs. And we think that if you are a truly global investor and you want to say you're diversified and you want to be prepared for all the risks out there, you need to have an allocation to emerging markets. And if you have an allocation to emerging markets, you need to consider China, whether that's ex-China, so we have an ex-China product, right? Or whether you'd like to be constructive on China and invest in China's economy. Now, remember, China specifically has much lower interest rates right now than the United States. They're coming kind of back, easing slowly into a more inflationary period after experiencing a pretty significant deflationary period in the past couple of years. So that's just if you think about it, it's flipping the script from what's going on here in the United States economically speaking right now, where we're kind of at this high point, right? China's like easing back into this growth rate again, right? And that dynamic means that the value to your portfolio of having some exposure to China in terms of a diversification benefit is substantial. And I think every investor should consider it and consider what their view and their positioning is around both China and the rest of emerging markets.
And do you think they are? Like, I'm curious on how you see investor behavior changing, or maybe over like the last 5-6 years from like the global diversification. Are they looking into these things? Are you still trying to like get people to see it, or where do you think people are at right now?
Yeah, I think it depends on who you are. We've seen a lot of flow coming in, for instance, to China from Europe, more so than from the United States. And that's driven by currencies, right? Partially because, if you're a European investor in the United States, you would have had actually your returns in the S&P because the dollar weakened, and you're a euro-based investor, you would have gotten, in some cases, I think it was if you just Swiss franc, Swedish krone, you're almost at zero, right? When you repatriate in your home currency. So that's led European investors are like, okay, now we need to look at other markets denominated in other currencies to put our money in. So we've seen that's been a huge trend. There's been, I think in 2025, China ETFs alone attracted almost around $7 billion of total inflow from in Europe. Okay, so so we've seen that ex-US in developed markets, investors moving in. Here at home, obviously I'm an American, I'm here in New York. It's been a little slower uptake, right? But now we are seeing more and more people saying, okay, wait a minute, I should have an international allocation, right? And what we've seen is also people saying, well, where do I invest internationally? I like investing in the US because I get this growth exposure. I'm exposed to AI development, right? When I invest in these NASDAQ stocks, right? And I'm exposed to data centers, right? I'm exposed to all of these technology themes, right? Here in the United States, where can I invest? And they're saying, okay, so where can I invest outside of the United States where I still get exposure to those same growth themes? And I'll tell you, the answer is China. There's almost no other answer to that when you ask that question, because yes, Europe has somewhat of an AI technology ecosystem. It's nowhere near as robust as what is happening in the United States and in China. So that's where we've been seeing little by little, gradually, people kind of understanding this, and we've seen a lot of interest through this in our products and what we can provide.
Very cool. And so, like I said earlier, we'll have a link that takes people to your site. But do any other tickers come to mind that people should poke into if they're interested? If they're interested in this conversation in particular, that
Sure.
you think they should check out right now?
Yeah, I think you mentioned you've got some Alibaba bulls in your community, so I would like to point their attention as well to Baidu. Actually, Baidu has been not very loved over the past couple of years. They've had a lot of challenges getting search off the ground, getting just because they get so much competition from AI. So search doesn't really work as well. They have their own AI, but Baidu is very undervalued. They recently came out at the beginning of this year. Hey, they're going to do an IPO of their chips unit, right? And investors cheered this news, right? Because Baidu is saying they're a huge conglomerate. People don't even know this. They have AI large language models. They have chips, and they're going to be spinning off their chip unit, which is really exciting. They're going to maintain 50% ownership of that chip unit. And it also shows that, okay, now investors can value this unit on its own. We think that's really positive for the company. We think it's performed pretty well so far this year. We think that can continue just because it was at such a low level. They've got a lot of cash to invest. So if you like Alibaba, I would look at Baidu as well now. And again, I honestly would not have said this about Baidu just a couple months ago. So this is a very new, because we thought management was staying too long. They weren't investing their cash. They weren't doing something to really convince investors of their value proposition. But we think that with the IPO spinoff of their Kunlun chip unit, that's a really good signal for the market and to investors. And if you're looking for magnified exposure, we have a ticker for you. It's KBDU, to get that 2x exposure to Baidu. Daily reset. Always use caution. But that's what I would recommend your Alibaba bulls look into as well.
All right, there you have it. And lastly, any last things you want to throw in there in regards to what you guys are building, things you have coming out, things you're excited about, anything along those lines before we sign off?
I mean, I think that I would look to what we're doing. We're one of the first, so our AGIX ETF is also very interesting to people. We're one of the first to ETFs to actually allow for investment partially in private companies. And right now we're holding Anthropic and XAI. And as you know, Anthropic is rumored to might have an IPO this year, right? So that's been really interesting. And if you want to check out our experience in investing in them privately, you can check out AGIX. And it's one of the few ways to get access to that kind of pre-IPO space for Anthropic, which, again, another rumor could go public this year. We'll see. So yeah, that's all I got. Thank you, Kate.
Yeah, absolutely. Yeah, Henry, thank you so much for coming on. And for people who are watching back at home, appreciate everyone for coming through. Definitely give a repost on this space or on this podcast. If you enjoyed the discussion, be sure to follow right above. We'll have them tagged so you can follow along. They'll have updates coming out, and definitely check out that link down below that will take you to their site. And if you're an Alibaba bull, you know where to go. If you enjoyed this discussion, you know what to look for. And yeah, man, Henry, thank you so much for coming on. Have an amazing rest of your day, everybody. Take care.